Okay. And we'll get to the homework 4 solution. But here's what Microsoft Access's graphic user interface looks like when you start it up with this database. What you have on the left here are tables, and that's where we're going to put our transactions, among other things, in the transaction tables. And then we have reports down here that it'll generate from that. And it creates those reports via a series of SQL queries, or you can think of them as little macros strung together in various ways to get the data that we need. You won't have to be mucking around with the queries at all. If you have a real version of Access, you're welcome to see all the source code. You're welcome to take it, do anything you want with it. So what I'd like to do, how we can very quickly, once you understand how to record the economic events, have the financial statements come out in 2 seconds in a very trivial way. So the way to do it is to use this software, and what you need to do is we're going to have to add some things in the tables. The first thing that we're going to have to do is tell it that we've got a new entity here. And you'll see in this software, as it's posted on Courseworks, there's a lot of examples in the class book I've already done. I'm not even willing to waste my intern's time creating all these financial statements. So we use the software to do it. Okay, so a lot of them are done already, but we've got to add, DevCore isn't in here as an entity. So we got to add DevCore as an entity. So let's go ahead and do that. So you just go down here, DevCore, and let's say anything that you have checked for reporting, it's going to report on, which is also kind of nice if you're doing subsidiary accounting, because you can have the parent company and the subsidiary and create consolidated statements very easily, that kind of thing. So we create DevCore, we tell it we're reporting on DevCore, and then we can close that. We're also going to have to tell it some report dates that we're interested in reporting on for DevCore. So let's go down here for DevCore and give it some dates. So let me just jump back to my little spreadsheet here. So let's say first transaction is 11/30/2020. So we can make that the beginning of the period, 11/30/2020. And end of period, I'm going to keep jumping back because it's late in the day. That's going to be 5/31/2021. And the beginning of the entity, I forget when we said that the entity was started, but the first transaction is 11/30/2020. So we could say that date or any date before that. I'll say, how about 1/1/2020 that the entity was started. So we introduce the entity, we tell it the dates we're interested in reporting on. I think it's 2021, I'm pretty sure. Yeah. I could be wrong, but let's see. We'll get nonsensical results if I'm wrong, right? Let me just quickly double check here. Yeah, I think it's 2021. Then what we've got here is a table called Accounting Properties. So actually, let me just close this table. We've got a table here called Accounting Properties. And what I've done is I've set up a lot of accounting accounts for us here, and you really shouldn't have to add any new ones. I mean, you're welcome to. It's easy to do, but you don't have to. So cash, for example, ALE just says, is it asset, liability, or equity? Is it on the income statement, and where does it appear if it is? If it's 0, it doesn't appear on the income statement. If it's 2, it's an expense. If it's 1, it's revenue. Is it on the balance sheet, and if so, where is it? Going sequentially here. And on our cash flow statement, is it in the operating bucket, the financing bucket, or the investment bucket? You can see all of a sudden everything we learned in accounting just compressed into this one table. Then we need to know some other things. On the balance sheet, we want to sort our assets by current and long term. So for assets and liabilities, we want to know, is it current or not? Is it part of working capital? Is something we haven't gotten to yet, but that could be important. So with the accounts have these properties, and if you want to add a new account, you're definitely welcome. You just need to be able to figure out think through all these properties for any new account you want to add. Again, I don't think you're going to need to add any. So then, what do we need to do? For the entity that we're interested in, we need to add all these journal entries or hybrid transaction table entries. And again, you can see a lot of the stuff that's in the class book and we've done in here, I've already created journal entries for. So what I want to do, whenever you want to add to a table, you see down here the play sign with the star? That will take you to a new entry. So I could click that. You can also simply just scroll down to the bottom of the table and you see the star here. That means you can start typing or pasting in from Excel, whatever you want to do. So I could give this a date, and then I could give it an entity, and I could give it an account, and you see you get a drop-down box here. You can only use an account that's already been defined, so you got to pick your account, and stuff like that. But I got to say, if we're going to spend the time to put these economic events in Excel, I don't want to retype them again, right? That's going to create all sorts of nightmares. So I'm going to delete that record. But what I'm going to do is just go over to where I've created all this economic stuff in Excel, and I'm going to go through and including 5/31/2021. And I'm going to hit Control-C, and then I'm going to go back into Microsoft Access and get in a new row here. Okay, and it says you're about to paste 9 records. Do I really want to do that? I think I do. Okay. So that's good. Now we have about another hour's worth of work and we'll have financial statements. No, that's not true at all. What are we going to have right now before our very eyes? Financial statements. All you have to do is paste this stuff in and it creates all the financial statements for you. Okay? So hopefully, how many folks does this income statement look familiar to? Raise your hand. The more than few, the proud. That's so great. So what's wrong with this half of the room? All right. So we got clearly the financing expense. We capitalized the points, right? And we amortized half of that and recognized the expense. And we had the SGA. What about all the contracting, all the design professionals? That's all in work in progress, right? That's all capitalized, so that's not there. All right, let's see if we can do another one. How about balance sheet? So we just double click on balance sheet, and here it is. So is this looking familiar? About 2.2 million, and our capital loan fee expense, this is the thing we capitalized for 70,000 and now half of it's gone. And the work in progress here, which is, how did I get that number? How did it get that number? Just added up all the work in progress entries, and it did probably a much better job of it than most of us could do. Shh, shh. Need you to be quiet for this. The liabilities, we still have half of that capitalized loan interest or prepaid expense account there. We have the principal for the loan, the draws we've taken out so far. The net income, we have our minus 39,000 and our paid in capital of 3.6 million. And I think there's only one left, right? And that's the cash flow statement.